Hello and welcome to Closing Trades right here on 80 Now with me, Aisha Faridi. And it's been a choppy day of trade so far. We're just about hovering around that 19,500 print for the Nifty futures. And we refuse to eke out gains. PSU banks, they're the ones which are actually bucking the trend today. Of course, if you talk about stock-specific names, it's been HCL Technologies after that over $2 billion deal with Verizon, which is actually holding up and is the star performer clearly today. And IT as such, the other IT names as well, they've been the ones which are staying in the green. Pharma FMCG, of course, has been a big drag. And if you were to just map how the global markets are moving, not all that great because they too seem a little bit under the weather. In fact, Europe has opened with sharp cuts. In fact, cuts are as deep of pretty much 1% across the board, and not just the benchmarks, even broader markets like the FTSE MIB or for that matter the Stock 600, they are sharply in the red as we speak. UBS, Credit Suisse, protection measures, they are the ones which are sort of acting as a bit of a dampener right now. Since we're talking about the global markets, let's also check in on what the US futures are indicating because they are much more stable than what the European screen is actually showing. It's pretty much a flat to a little bit of a soft move across the US futures, while we are marginally soft, down about 65 odd points or so. What's happening in terms of individual stocks? Let's address that as well. And a couple of earnings reactions is what we've seen. A strong number coming in from HBL Power, from a GMM Fodler. We spoke with the management as well. Inline set pretty much across all counters for Apollo Hospitals, be it the top line, the bottom line, or for that matter, the kind of margins as well they've posted, pretty much in line with what the market was anticipating. Having said that, weak set of numbers from an Info Edge, from a Dollar, or for that matter, from even a Sequence Scientific. And you can see most of these stocks are reacting to those performances. HCL Technologies, like we mentioned, it's a $2 billion Verizon deal. It's a mega deal for the managed network services. And Morgan Stanley is saying that this is going to lower the risk to their FY24 guidance and is only going to aid them. Also, having said that, there is the entire set of MSCI Global Index rejig as well. Those stocks too are pretty sensitive in trade today. It seems that the exclusion is going to be Jubilant FoodWorks and an inclusion of REC as well as Supreme Industries. So both those stocks reacting to this particular announcement coming in. But what about the market texture? Let's discuss that a little bit further. We have with us Naresh Mirani joining in on the show right now. Jonathan Shizel, of course, joins in on the fundamentals of the market. And we also have with us Kush Bora to outline the technicals. But Naresh, hi, afternoon. If I could just start off the discussion with you first. Quiet consolidation, but yes, the band continues to grind a little bit lower. Where do you see the next support for the index?
So the same supports 19,300, 350 remains a major support. 19,650, 700 remains the stiff resistance. But the only thing which comes up on our list today is the fact that Reliance Industries is showing momentum. The last 5-7 days highs is about to be crossed. 2,600 is a major level for it. If it can sustain 2,600, that would be a big breakout. It would be an all-time high adjusted for the geo-financial. So Reliance Industries is the one which can change the direction of the market in terms of, given that we are in such a tight range of 400 points. So we'll be watching out for Reliance Industries if it can follow up beyond 2600, 2620 levels. So looks very promising. Overall, the range would continue. Only when we get about 19,650, it becomes a momentum trade.
Individual stock or sector trend that you're picking up? Kush?
Hey, hi, I didn't realize that question was for me. Well, very stock specific, I see a lot of action happening across the, mid cap and small cap names. And, then there are pockets. On the whole, I agree with Naresh, there is a bit of caution that is advised, on the indices. Hence, I wouldn't be taking too much, or rather a heavy position home. So I'd keep my positions light as far as, the sectors go. I think the power sector seems to be doing well. And on the short side, if anyone's looking for a trade in a cautious market, I think FMCG is a space where, you could be a little watchful. Britannia, HUL, both of them have actually been, under a lot of pressure and continue to remain so without any kind of, stoppage. So FMCG is a sector that I'd probably keep my radar and keep on my radar for short positions. And power sector is one that I'd have from a long perspective.
Hi, afternoon. What is it that you've made of the recent correction that played out in the Indian markets since last 10 odd days? Pretty much aligned with the global markets, though.
Yeah, it's been an interesting, I think, few days after obviously a pretty strong period. India clearly has come under a bit of pressure, as you say, as we've seen elsewhere. I think a lot of international investors do want to allocate more to the likes of India and emerging markets, but the continued weakness out of China and the lack of policy action is probably holding them back. And clearly, the most important point remains when and at what level will US rates peak out, and that obviously has implications on the dollar. So we're still in sort of no man's land, and obviously from a sort of northern hemisphere perspective, seasonality is pretty bad as well. Over August, so probably this correction probably carries on for a little bit longer.
Correction might carry on for a little longer. Jonathan, hi, this is Anisha also joining in the conversation. The big debate these days seems to be when it comes to the financial space. It used to be a consensus buy, but things seem to have turned a bit. Of course, yesterday it was a bit of a knee-jerk reaction with the RBI decision on ICRR. But incrementally speaking, naysayers and analysts are calling out that there's lack of fresh triggers, and if at all, the risks are more skewed on the downside.
Yeah, look, I mean, Indian financials, we've sort of continued to play that space, but primarily in the private banking sector. It's from an outside investor, Indian financials are a very good way of playing the broader Indian story, if you like, because obviously, banks have their fingers in pretty much every part of the economy. There'll be short-term ups and downs, but I think Indian financials still remain a vital sector and a good way of playing the Indian story as such.
Okay, fair enough. That's the word coming in as far as India's story is concerned and how financials are stacking up. What else is happening in the market today? Well, IT is holding up okay, and that's all thanks to HCL Tech. That mega deal that they signed with Verizon is something which is working well, 4% higher on that one. So what's your view, Jonathan, on IT? Do you think it's bottomed out, or there's another quarter of poison which is left?
Yeah, so I mean, we've been saying for a while we've remained decently positioned in the IT sector. Again, I think the long-term story is a good one. Obviously, this whole AI story, there's another sort of leg to this whole area. And so yeah, look, short term, I think it probably has bottomed out. Rupee remains sort of relatively well anchored, hasn't really weakened off. But I think obviously with these new deal wins coming through that we're hearing about, I think the sector still remains pretty good.
Any value in IT, and does it seem like any of these stocks, including HCL Technologies, which is jumping up on the back of that $2 billion deal with Verizon, do you sense any of these names could be bought now or at least nibbled into?
So technically, the case is we have very divergent moves happening across the IT space. So HCL Tech, on the other hand, has been relatively a strong recovery compared to what happened with the large cap IT space. So if you look at the all-time highs for HCL Tech, it was 1350. It went all the way down to 900 in September of last year, which is where most of the IT names bottomed. And now we are at almost 1150 to 1200. So looks the most promising one in the large cap IT space. The second one is Tech Mahindra, which looks interesting purely for the fact that after the numbers, the stock corrected all the way to 1100 and has made a slow and steady recovery over the last 10 sessions to 1250 levels. So these are the two names which look very promising in the larger IT pack. In the mid cap IT, I would still wait. There have been short-term momentum breakouts in some of them, but some of them have already gone way beyond 52-week highs also. So I would focus on HCL Tech and Tech Mahindra on all dips.
That's the take coming in as far as IT stocks and HCL Tech is concerned. But Kush, I wanted your take regarding a couple of these big buzzers. Kalyan Jewellers is moving on heavy volume, sitting at record high level with a gain of around 10%. And on the other hand, you had Apollo Tyres. The numbers weren't that bad, but the stock is seeing a cut of 7% again on heavy volumes.
I'll start with Kalyan Jewellers. Again, this stock, if you see, has actually given a breakout today after a fair bit of consolidation. For about a month or so, it's been consolidating. The bias turned positive recently, and it's just moved out. And not to forget that this is after a very sharp run from about 110 odd levels that we've seen not too far back, but just in July. June rather. So the moves there, it's actually up on very strong volumes. I don't see a reason for this move to stop anywhere before 225 and 240 kind of levels. So I'd suggest if anyone's got any positions, don't be in a hurry to exit, because the stocks actually moved up quite a lot. 200, these numbers typically kind of remain a level where you'd want to book profits. But the sentiment aside, there isn't anything on the charts that is suggesting that you should exit them right now. Yep, mild profit booking, but that's a Friday effect as well. So all in all, hold on to this one. 190 would be a trailing stop loss if you already have an existing position. As far as Apollo Tyres goes, well, yes, this is a sudden breakout, and today the stocks crossed below its short-term averages, 20-day and 50-day both, on the back of strong volumes, and it's coming very close to its support zone of 395. So as long as that is maintained, I'm not saying there isn't a cause of worry, but the stock should probably halt its fall somewhere around those levels. So as far as 395 is maintained, I wouldn't read too much into this dive. I'd probably look for buying opportunities, but I'll give it a day or two just to see if it holds 395 kind of levels.
The take coming in on Apollo Tyres right now, sinking quite a bit, down about 7% as we speak right now. Couple of other names. Look at what the entire PSU pack has been doing, and Hindustan Copper is actually, roaring right now. It's a 6% move, no less, that you're seeing on this one. REC being the other one, which is also seeing a decent move. Of course, there is that additional trigger, that of the MSCI Global Index rejig as well, and an inclusion for REC that seems to be aiding this one. And then, of course, there's Motherson Sumi as well, reacting to its positive numbers and the management commentary thereof. A solid 3.5% move on that stock. Look at India Cement as well, the charts, and especially the last 2 days, the kind of solid moves that you've seen on India Cements. It's now climbed up above that 255 level on futures. It's a solid 6% move that you're seeing on India Cements right now. 6.5 nearly in the cash markets. That's India Cements in trade for you right now. Naresh, let's read the charts here, because quite a bit of buoyancy actually on India Cements.
So after the deal of Sanghi Industries, we've seen a breakout move across all the cement names, whether it is India Cements or whether it is Kesoram Industries or Orient Cements. So we are seeing that momentum play out across the board. India Cements has been a case wherein the stock keeps going into derivative band also. The stock gave a breakout 2 days back about 230 levels. And now the next level to watch ideally for the stock would be closer to 260. 255 is the next level, which was the recent highs, almost the 6-month highs. And the next one is 295 to 300. Overall, the trend is positive. The only problem is tomorrow, again, it goes into a derivative band. So could see some bit of a fade off. So positioning could be difficult, but on dips to 245 to 250 would be a buy. Stop loss below 235, and slowly and steadily could go towards the 280, 300 mark here.
On that note, let's do one thing. Let's take a breather on the show. When we come back, we discuss more stocks as well as what's making the headlines. Hasn't changed much. We're just around the 19,450 mark. There was a bit of recovery. At one point of time, we thought that we're likely to head around 19,500. No, doesn't seem to be happening for now. In terms of stock-specific action, GMM Pfaudler continues to do quite well. It's high by 12%. Anand Rathi is doing okay, and then you have likes of Kirloskar Oil, etc., that are also doing its bit. Jonathan, wanted to get a sense from you that, manufacturing was the next sunrise sector per se for the Indian markets, but then within that as well, there are a lot of verticals, right from defense to electronics manufacturing, etc. Is this a space that excites you?
Yes, I think so. I'd agree with you. I mean, obviously, you've got to consider where we are in the underlying economic cycle for which part of the sector. You've got to look at the available listed stocks in each area. But clearly, also you've got, structural stories such as, obviously the geopolitical situation in the globe, and some manufacturing activity has certainly been moved into India, which presents opportunities for various different segments in the Indian listed space as well, and unlisted. So yes, an interesting space. There's a good variety of stocks available in India. And certainly one which traditionally we've tended to play as well.
Right, okay, that's the take coming in on some of those manufacturing names. The PSU basket, let's look at that also, because that as a pack has been doing very well. I mean, the traditional sort of color in which investor did look at PSUs, that doesn't seem to be quite the case, especially given the kind of returns that some of these stocks have seen in just the last year-to-date move, or even the last 3-month move, if you were to really stack that up. Especially the PSU banking names have done extremely well. If you see, in fact, the recovery that they've made, say, from the COVID lows, for instance, Hindustan Aeronautics has seen a staggering 571% move, BEL, BHEL, SAIL, Oil India, even an IRCTC, PFC, REC of course is a buzzer today as well. All of these names have held out very smartly indeed. And of course, like PSU banks, like an Indian bank, Bank of Maharashtra, IOB, Can Bank, the list has really broadened out of those traditional favorites, the likes of an SBI, which also has done well, has seen a 173% move from the COVID lows, but the rest of the gamut as well has participated. Today, of course, most of these stocks, in continuation with the ICRR announcement yesterday post-policy or amidst policy, these stocks have been a little bit on the sidelines. Jonathan, just your take, particularly on PSU banks as well, because, like we were discussing earlier, the underlying trend this time around seems to be that in Q1, or rather since Q1, the margins clearly have peaked out. Now, that could very well be a short-term phenomena.
Absolutely. I think, again, just talking at a very generalist level, the PSU sort of space, has traditionally traded at a valuation discount to private sector peers. And you tend to find when the market's done well that, after the private sector leaders have moved, then obviously the market attention shifts down to the more value-orientated PSU space. So that it's not unexpected that the PSUs have done well. And obviously you can pick up exposure in some PSUs that you struggle to find elsewhere as well. So, from our perspective, and I think we've said this many times, we just focus. We prefer the private sector, the private banks vis-a-vis the PSU peers. I can understand why some investors might choose to play the PSU space, but we tend to be very long-term investors, and we're very happy with the sort of compounding returns that a lot of the private sector banks have delivered investors over time, and therefore we haven't sort of switched into the PSU space.
Switch to PSUs yet, but Naresh, I think Kush did point out his top bets within the power sector. Wanted yours as well, because JSW Energy, that has been doing quite well today as well. It's high by 3%. Yesterday it was up around 5%. Torrent Power, the numbers were quite good, but the stock is seeing, I think, a bit of a profit booking. What's your top recommendation from this entire basket?
So there are two ways to look at power. One is the PSU side, which is where we continue to like Power Grid, and on NHPC, the other one. These are the two names which look very promising, strong charts. Power Grid has seen a correction and a good entry point. NHPC is one which gave a big breakout and is around that 49.50 mark. We could see another leg up. Same way, there are, say, Adani Power could be interesting going forward. That is a chart which comes up on the radar. Tata Power and JSW Energy remain the best bets in the private side of it, which is where we've seen a breakout in JSW Energy. Tata Power is yet to see a follow-up move beyond 245 levels. So Tata Power could be the next interesting bet. And even a smaller name like CESC has come up on the radar if it can sustain above 80. So all in all, a lot of power names are coming up on the breakout list. So one should be on watch out for most of them.
Okay. Just looking at the kind of commentary that you had from the ITC AGM as well, while they continue to, strengthen their cigarette business, they're saying they're also committed to developing newer technology pathways. They do see significant headroom for growth when it comes to the hospitality sector. We've, of course, seen the buoyancy across this particular segment, and that new vectors of growth are actually being nurtured as well. Saying that the next strategy for the company, for the FMCG business, has sort of redefined critical pathways to growth and profitability. They're saying that the addressable market for the FMCG portfolio is now estimated to be about 5 trillion rupees, and they are strengthening the structural competitiveness as well. Jonathan, while for businesses like ITC, it continues to be a largely cigarette play, but with now the hotel demerger, with them strengthening the FMCG portfolio as well, do you think even from the current, stock price, there could be significant headroom and maybe, significant gains to be made even from these levels of 447 thereabouts?
Yeah, look, it's an interesting company, and clearly, we have seen some restructuring moves finally happening. I've looked at the company for many, many years, and the FMCG side of the business has always been the sort of darling of the business that will grow one day, become a huge side. Yes, it's clearly a big business. Clearly, it has been accelerating momentum. But it is a very competitive space. You have a lot of very strong, both international and domestic competition in that space. So, there is a huge addressable market. And if they get that right, it's potentially very interesting. But clearly the core business still remains tobacco. And obviously that has some issues for some investors. But yes, it probably, if they carry on the restructuring side, if they carry on doing the right things, then you could argue there's still upside to this stock.
Jonathan, good to have you on the show. We'll let you go on that note. Glad that you could take time out and join in. Let's also take in some closing strategies. Kush, you go first. What are the closing trades you would recommend?
And both of them, incidentally, from the cash side of the market. First is HP Adhesives. Now, this stock has been doing rather well. It's seen a very steady secular kind of an uptrend, almost agnostic of what the market is doing. Likely to continue on the upside for targets of 525 and 540 in the near term. And on this one, 480 is where I would place my stop loss. Something similar is another company called Apar Industries. This stock also has seen a very steady up move ever since Feb, when the breakout came in, and for the most part it's respected its 20-day moving average. So even this has not been largely disturbed by the market moves. Even in the recent downfall, 20-day moving average was the level that it fell to and then rebounded sharply from there. Recent setup indicates momentum indicator also picking up. Volumes are a little thin, but not too discouraging either. So all in all, Apar Industries 4120 is the first target. 4170 is my second target on this. 4020 is where I would place my stop loss for a fresh entry.
Okay, so point taken. Those were the CT ideas coming in from Kush. Naresh, what about you?
So that would be on Reliance Industries. The stock is crossing a 10-day high and is setting up for a relative outperformance in the last two sessions after a really long time. Now, if you adjust it for the Geo Finance 200-250 rupees, the previous all-time high for the stock was 2850. So that comes out 2600, 2650 to be a very critical mark. So for now, I expect a test of that 2600, 2650 in the short term. But if it crosses that, that could take a leadership move and actually give a fillip to the index as well. So today could be the first indications of a move on Reliance Industries. So expecting this to take leadership from here on. Add on the way up about 2600.
No, let's slip into a very quick break with news that we haven't seen a meaningful move for the markets. It's been choppy, but in a very narrow band. Right now, though, we're just about defending 19,500 on the Nifty futures. Spot, of course, is much lower than that at 19,466. Quick break. When we come back, map the last half an hour of trade this week.
Indians are going
on board the management of Zydus Life Sciences. Dr. Shavril Patel joins us to talk to us about their earnings, because it was a decent show. At least on year-on-year basis, we have seen a good growth, but on a sequential basis, there seems to be a bit of a blip. Mr. Patel, hi, thank you so much for making time and speaking with us. And that's exactly the first question. India business was down about 4% sequentially, and that compares with the rest of the pharma companies that have actually managed to report double-digit growth. Is this on account of seasonality only? And for the rest of the year, what kind of growth are you expecting?
So I think the India business, I think more appropriately is to look on year on year. I think because of the cyclicness of the business, we have also a very strong focus towards the second half of the year. I think it is not appropriate to look at quarter on quarter. Having said so, I think on a year-on-year basis, we have seen a very strong double-digit growth to our branded formulations business. And adjusting for NLEM, it's a 12% growth. And I think what is more important is over the last 3 to 4 quarters, we have met market growths and many times expected the market growth. So for the domestic business. So I think overall it's in a good place with the product mix that we are focusing on.
Okay, fair enough. Let's talk about the US business as well, because the India business you said is looking okay. US business was also steady this time around, but talk to me about how the demand trends are there in terms of pricing and any big key launches lined up.
Yes, I think we do have still a very valuable portfolio of limited competition generics, complex generics, and also some first to launch generics. So we do see a very healthy launch pipeline for the US generics business, not only in the coming years, but over the next 3 to 4 years.
Right. So in that light, could you tell us whether your R&D spend is likely to inch up from the current 6.3%?
So I think, as I said, R&D is, again, I think annual guidelines are much better than quarter-on-quarter guidelines. But we believe that over the next 2 to 3 years, we are looking to spend between 7 to 9% as a percentage to sale. I think this year we will be between 7 to 8%.
And could you leave us with your margin and revenue guidance or growth for FY24?
I think for Zydus Life Sciences, we do expect for the revenue point of view a good double-digit growth for the coming year. And we do see margin expansion from our last guidance to about 150 to 200 basis points improvement in the margin in this current financial year. So I think overall we are seeing an uptick to our profitability aided by volume growth, value growth, and obviously strong performance by India, US, and developing countries.
Well, great to have you on the show and highlighting what exactly should one expect from the future quarters ahead for Zydus Life. Quickly, let's talk about the sugar sector as well. And with the rising prices of rice, wheat, as well as pulses, the government is now worried about and, taking steps to check prices of sugar in the coming festive season. In fact, we at ET Now are learning that all sugar mills are directed to maintain monthly sugar stock holding limits, and sale of sugar in excess of monthly release quota will also be penalized. Sameer Dikshit, my colleague, joins in for more on the same.
On the front of inflation, it clearly seems that the government is at the defensive position. Government is taking back-to-back steps so as to ensure that the prices of essential commodities, it remains under control, and also the availability is maintained in the market. And the latest move is regarding the sugar. The government has released an advisory to the sugar mill owners that they have to sell minimum 90% of the monthly quota that is being released to them. And if failing so, some disciplinary action might be taken against these sugar mill owners. So this advisory has been released last night, and this advisory also indicates the fact that there has been input that the government has been receiving, that there are traders, those who are indulged in hoarding practices, that they are artificially holding the sugar stock, and they are anticipating that seeking the upcoming festive season, the prices of sugar might escalate. Seeking the same, the government has came up with this advisory. But if we go by the numbers, the Sugar Mill Association ISMA has come up with the preliminary data that suggests that the production of sugar for the ongoing sugar season, that is October 2022 till September 2023, the sugar production is around 362 lakh metric ton, whereas the ethanol diversion will be somewhere around 45 lakh metric ton, and the available sugar will be somewhere around 317 lakh metric ton, whereas the domestic consumption stands, the estimate suggests that it will be 275 lakh metric ton, and this indicates that the government will be having enough stock of 45 lakh metric ton, and that is the reason that government is confident and has been echoing that the prices of sugar will be under control, especially during the upcoming festive season. The consumers won't have to face the heat of the rise in sugar prices. But there are inputs, as I have mentioned, that the traders are indulged in hoarding practices, and so as to check these sort of illegal activity, the government has released the advisory, and government has been constantly saying that the sugar availability in the market and the prices will remain under control.
Okay, Samir, thank you so much for joining us with that exclusive detail. But overall, the agri-commodities in India are inching higher, whether it's tomatoes, rice prices, wheat prices, and even sugar prices for now. So everything seems to be inching higher. Devang, that brings me to the question that the entire thesis that, the peak of the rate cycle is already over, inflation is under control. Does it put a bit of a chink in the armor with respect to that, or do you think this is very, very transient and temporary?
Thanks for having me on the show. Good afternoon. I think seems like more a transitory measure. Yesterday's the policy statement post the RBI policy also did not indicate any major concerns on the food inflation front. Of course, I think seasonality comes to the fore when we discuss about this type of agri commodities like sugar or again spices and stuff, and all this wheat and the food inflation raises. I think most of this commodities probably behave at least in a year or twice in a year. It behaves a little abnormally. My sense is that probably this seems more transitory. As I said, yes, it raises a little bit of the sword on the inflation, where again rates seem to be status quo for some time. But yes, it is a little bit of risk to the theory that the interest rates have sort of peaked out. So probably it raises a little bit of concern for rate sensitives as well.
On the rate side and the rate sensitives, but what about the commodity sensitives? And I'm talking about the FMCG player, the manufacturing names, the likes of Pratap, Britannia, Mrs. Bector, etc. Do you think the play that was there, that there's going to be a margin expansion for them, that also gets at risk? Because this quarter as well, not a blowout number from any FMCG company as such.
I think yes. So probably the food inflation was naturally under curve for a majority of the last 6-8 months, and we saw a bit of positive commentary coming in. Rural India also sort of started to contribute, and the hinterland of India, which was supposedly getting more and more sidelined in the sense that the rural consumption was not thriving, and urban consumption had remained strong. I think rural consumption has also shown bit of green shoots, and with this, if again the food inflation starts rising, I think it does not augur well for this type of the FMCG players. Most of the players that I heard commentary from, be it Nestle, be it Britannia, be it HUL, were not negative as such. Probably there have been a little bit of margin expansion for some of these players. But another part was volume growth was not across the board as great as it was sort of desired to be. So yes, it again sort of raises concerns about the agri commodities rising, and again the FMCG players probably have the wherewithal to pass the cost, or are they having the pricing power? So again, that will come down to brands which sort of has that sort of pricing power, and who sort of also have that sort of valuation which can get either re-rated, or whether the earnings growth comes in this FMCG plays as well.
Okay, Devang, stay with us. Lots more to talk about. Let's also take stock of how the dealing room chatter has been this Friday afternoon as we wind up the week, and an extremely news and earnings heavy one as well. Sharad is here with all that buzz. Sharad?
Well, yes, there has been volatility coming in the entire week, but the dealing rooms, they have suggested that CRISIL would be in focus, and certain counters there has been buying coming in from the FIs. Now, the company recently had met Paris Washington also this week, and importantly, if you look at the volumes also, that has come almost 10 times its 20-day average. Now, the stock is up almost 42% this year itself, and today's trade itself, the stock has crossed the technical levels of 50 DMA levels. And also do remember the FIs itself, they are having 7% stake in the company. Now, the dealers have also stated that this buying is expected to actually increase as well for the next 2 to 3 odd sessions. Apart from this, also the company has reported a strong Q2 numbers coming in, and the commentary has been strong when it comes to the rating agencies' revenues as well.
Thank you so much for that. So CRISIL already higher, and the other one that you talked about, Relaxo, last week, that too is trending higher. So let's take it across to a technical guest to make sense of that one. Relaxo, that stock, as well as InfoEdge, because the numbers from InfoEdge were rather weak, and we spoke with the management who said that yes, the IT billings continue to be quite weak. They can't put a timeline as to when the recovery will be there, but the incremental negative that I found in the numbers was the fact that commentary saying that even non-IT is seeing a bit of a slowdown going forward, and they are saying that the margins could take a hit of almost 500 to 600 basis point if the billings continue to be on the lower side. Kush, your take on InfoEdge as well as Relaxo?
Info Edge, I agree with you that the downtown's actually been quite sharp. The commentary is, perhaps not helped at all. If I see here, I think a lot of, down move is still left on this one because the key support zones are broken now. Today, the stock's breaking below its 50-day moving average, and on the back of, very strong volume. So I won't be surprised that, if this forms a base again somewhere near 4,300 odd levels, which were the support zones. So, if anyone wants to go short here, it'll actually not be a bad idea because it's broken a key support zone. There is still some downside left. For any kind of short positions here, keep your stop loss at 4,500. So a risk reward ratio seems quite favorable here on the downside. As far as Relaxo goes, well, the entire the footwear space was in a bit of a momentum, but this one's clearly tried to break out out of the range. The reason I say tried is because if you see the high today, 975, but it's come down sharply from there, and again facing resistance on a closing basis, basis at those 955, 950 kind of levels. So for me, I'd wait and watch on this one. A big jump, but it's being negated at the close. So wait and watch on this. No fresh entries till 955 is crossed on a closing basis. Existing position, not a worry. You can hold on with a trailing stop loss of 930.
Okay, that's the take coming in on some of these buzzing stakes. By the way, HAL just came out with its numbers. If we can just bring up that stock price as well for you and show you how it's panning out. Wasn't quite the impressive set. HAL a little bit under pressure after having quite the steady day today. Maybe it's the PM effect, call it what you may. 37.74, that's where the stock is currently dipping after its numbers came out. In the meantime, it's BHL clearly, which has been quite the steady show today. That continues to hold out 4.25%. Hindustan Copper has, by the way, now gained about almost 8%. That's a very big move for a stock like Hindustan Copper. In fact, as I see it, most metal stocks are actually holding out. You've got a Tata Steel as well, which is holding up almost 1% as we speak right now. So most of these mining and metal names are fairly buoyant in trade. Naresh, any trend that you're picking up here? Hindustan Copper, Tata Steel?
So clearly the trend bias is positive. Globally also metal names have done well. But the leadership has been very clear. Jindal Steel, which I've been consistently mentioning as the leader, the stock continues to make new all-time highs. Now the stock is at 699. The next leadership is JSW Steel, which gave a fresh breakout into all-time highs yesterday. So that would be the second one. Third in the line would be Tata Steel, which I would be watching out for if it can cross above the 124, 125 mark. Now 125 was the high in February of this year. So if that crosses, that would be a big breakout. So watching out for Tata Steel next, but clearly it is Jindal Steel and JSW Steel, which have really strong charts compared to rest of the metal names.
Just wanted to track some of the stocks on a week-to-date basis, and I'll request my producer to follow me in terms of the stock prices because it's been a great week for Gland Pharma. That was high by 23%, a result candidate at that. Kalyan Jewellers was high by around 20%. But interestingly, it was also JSW Energy, and no new news flow as such on JSW Energy this week, but it's managed to gain slowly and steadily almost 17%. What are the other big names? Gland Pharma. Again, as I talked about, that was the result reaction. Safari Industries, that's high by 20%. You also have Jubilant Life, which is doing quite well. That's high by 19%. Devang, your sense on a couple of these counters, which got a solid re-rating of sorts post the earnings. Safari as well as Gland Pharma. Despite the run-up, would you look at probably buying any of this name? Devang, the question is for you.
Okay, so the question is for me on Gland Pharma or the pharma sector, right? Rather.
Sure. Yeah.
Yeah. So I think what we have seen across pharma sector is it's been a rally after a long time. Most of the pharma companies, be it related to US generics, where there was a stable pricing environment after a long while, most of the pharma companies show good bit of margin expansion. The revenues were quite robust. And if you listen to the management commentary of most of the pharma companies, be it from a large cap like Cipla, Dr. Reddy's to even mid or small caps, most of the management commentaries were quite interesting. I think the run-up has just started in the last couple of quarters. So the sense one gets is that after a long hibernation, pharma has come out of its orbit. probably there is a lot more upside. Of course, one needs to be a little more specific in terms of whether it's a US generic pharma or an MNC pharma, or for that matter, even a path lab. But most of the businesses look interesting in terms of valuations, because most of the market participants, most of the market, I can say, leaders have probably rallied a little ahead of time. There is some bit of valuation comfort still in pharma, where of course it's reached near fair valuation, but it's still nowhere like a premium valuation which pharma used to command during the COVID times.
That's the take coming in on some of these pharma names. In the meantime, let's also talk about the losers. Anisha just flagged off Apollo Tyres. That's fallen almost 8% on the futures. Canfin Homes, MFSL. And it's quite intriguing considering some of these names were actually buoyant yesterday when the rest of the banking names were falling. Naukri and Alchem, these are some of the big losers today. There's, of course, IndusInd Bank, which is a rank underperformer, 2.25% lower today. Although this was one of the only banking gainers yesterday. ICICI Bank, HDFC Bank, they continue to reel under pressure, as is the case with the Bajaj twins. There's also Infosys, Techem, Sun Pharma, Hindalco. They all continue to reel under pressure. Naresh, any trend that you may have picked up, in the recent correction which played out since last week up until now, the consolidation that is playing out? Because what one has seen is that it's the mid-cap index, which was actually fairly resilient. And I recall just earlier this week, you had the mid-cap index hit a life high.
So one thing has been clear, that the index has been consolidating, but the broader indices have not seen much of a correction. So if I were to take the mid-cap index, today is the first, say it is still down only 0.5% from the all-time highs. Yesterday hit a new all-time high, day before it hit an all-time high. Same is the case with small cap index, which is flat today, say 20 points, same structure. So overall, the broader markets have not seen a correction. We've seen a correction only in the index, which is purely Nifty and Bank Nifty. And that too due to some of the heavies, say heavies like HDFC Bank has corrected from 1700 down to 1620 levels. Reliance Industries has taken a dip. So overall, the bias is still very positive on the broader markets. Going forward, the trend is basically where we are seeing oil and gas companies come up, power come up. In oil and gas, we are seeing Reliance Industries take leadership. If that happens, we could be looking at a significant flip on the index itself. So Reliance could be the one which could change the tracks. And wouldn't be surprised if it could test that 2650 mark next week.
650 is what Naresh is betting in on Reliance. On that note, let's take some BTST trades as well going. Kush, let me start off with you.
PS stock which you mentioned just a while ago, which is BHEL. It wasn't a very strong footing, but just after the result, we saw a very sharp dip. Just been equally sharp. The rebound has been equally sharp today. Also, the stock is up on back of very good volumes. So I wouldn't be surprised to see 105 and 107 kind of levels on this, in the coming days. Monday also, wouldn't be surprised the kind of move that it's been seeing. A stop loss here would be at 101. Banking sector on the whole is in a bit of a pressure, but one stock that stands out is RBL Bank. This stock too has been hovering around its 20-day moving average, but with a positive bias. So one can go long in this for a BTST trade. 235, 250 would be the targets. 215 is where I would place my stop loss.
Naresh, what about your BTST ideas?
So first would be a buy on Reliance Industries with a stop loss at 25.40 and a target price of 26.10. Second would be a buy on Power Grid, which after correcting 20 points from top, saw a gap up move today. Could see more follow up in the coming week. Stop loss at 243, target price of 250.
Okay, so that's the take coming in as far as the BTST ideas go. But for the week overall, it has been something which the bulls would like to forget, because we continue to be in a very, very narrow band throughout the week. In fact, it was 19,400 to 600 kind of range that we were in for most part of the week, but goes home with a cut of almost 0.5%. The cuts were actually quite deeper for the banking names, because this month itself, on a month-to-date basis, that index is down almost 2%. This week as well, that index was clearly underperforming, and what did not help was, of course, the RBI decision yesterday. Devang, my question to you on financials was specifically with respect to the underperformance. Do you think there's any candidate which is, undervalued right now, where the risk reward is very favorable? Is just because of the sector dynamics, it's not getting the momentum back?
Clearly, what we have observed is that the rally had had been extremely fast and furious, and most of the financials, right from it started off with private banks, it trickled down to PSU banks, and then also most of the NBFCs, which also suddenly came out of the blue and started to do well. Most of the NBFCs, be it consumer, be it vehicle-led, or be it even rural-centric NBFCs, all these NBFCs and even small finance banks, some of these banks have come up with good set of numbers. So the sense one gets here is this just a sort of some bit of a breather which they are exhibiting. And the beauty of this rally across in the last 4-5 months has been, it's been extremely broad-based. So there will be obviously some sector rotation which will happen from this sector to that sector in the short term, looking at valuation concerns, or looking at price point concerns, as well as the flows, the ebbs and flows which FIIs or DIIs sort of do away with. So my sense is that yes, it's one of the best sectors to be in. Financialization, credit growth, it's a proxy play for India's economic growth. So I think a lot of these banks, be it HDFC, be it ICICI, not recommending but just trying to give certain examples, are clearly going to be winners over the longer term period. So certain NBFCs, couple of banks, I think most of this as a basket would typically do well if somebody has at least a 2-year, 3-year horizon.
Coming in on which way the wave may be headed for the markets and those who are looking at a long-term play. Even though we've come out of a very weak last week, the 1-week return for the Nifty is actually not all that bad. We've fallen less than 0.5%, and the mid-cap index in this week alone has managed to actually gain 0.5%. Similar has been the price action for the Nifty small cap index as well. And just going by the 1-week returns, the Nifty PSU index has held out very well. IT made a strong comeback, so a 1.25% gain coming in there. Metals held out well. Pharma, energy, it's quite the sectoral churn which continued to play out, and unusual names actually find place there. And definitely, it's the rate sensitives which were the ones which were at the bottom of the heap. So realty, bank, auto, they all were in the week. If you talk about the key winners, though, it's M&M right on top there with a 5.5% of a solid move. There was Tech Mahindra, almost a 4% gain there. Titan held out very well. SBI Life saw a 3.5% gain in the week gone by. And then there was LTI Mindtree as well, which held out by about 3.5% or so. But going forward, Naresh, do you believe that next week too we could see underperformance from Nifty Bank in particular?
So I would be a little more positive on the Nifty Bank if it can hold on to the current lows made today. So if it holds around 44,100, 200, we could actually be seeing a bounce towards 44,800. And the main part is HDFC Bank and ICICI Bank, both the major heavyweights, 50% of the index, have come closer to the recent supports, and could see a reversal from here. So more positive rather than negative on the banks.
Okay, so that's the take coming in as far as banks is concerned. Continues to be a bit negative as far as the trend goes. But thank you, gentlemen, for joining us today. Kush, Devang, as far as Naresh, and have a nice weekend ahead. The next week is going to be truncated as well, so a bit of a sigh of relief there, because this one has been a very, very topsy-turvy ride for the market. Ending just around that 19,430 mark, the overall market breadth also wasn't very, very positive this time. In fact, it was more favoring the declines versus the advances today. And in terms of the sectors, it was only IT which was supported by HCL Tech that goes home in the green. And then you also had PSU banks which were doing all right. Actually, IT as well by the end of the trading session has lost out a bit. PSU banks, that held out in the green, so 1.25%. IOB, Central Bank, UCO Bank, these were the big gainers today. On the losing side, Z gave up some of the gains that it saw yesterday. Yesterday was a 17% rally. Today it saw a cut of around 3 to 4%. Ditto was the case with Dish TV as well. FMCG names also did not have a great run. So apart from Varun Beverages, which was high by 4%, you had Tata Consumers, Dabur, HUL. They were all down and out in the trading session, and a lot of result reactions as well, right from a GMM Pfaudler to Supreme Industries on account of that MSCI inflow. A lot of these stocks buzzing around in the trading session. On the losing side, Apollo Tyres went home with a cut of around 9%. Alchem on account of that guidance cut was down 7%. You also have Birla Corp as well as Torrent Power, which saw a cut of around 5%, and Info Edge that delivered numbers later in the day. And the commentary was very, very weak with respect to when the IT business will start recovering, what happens to the non-IT hiring. So that too was down about 4 to 5%. So we're all ending the week on a bit of a negative note.
Yeah, and I'm just looking at the OI build-up on Apollo Tyres, almost 38% there. For an India Cements, though, on the other hand, which is been a star performer all through this week. Big move on the stock yesterday. Today too up nearly 6% on the futures alone. India Cement saw near about 22% addition. So these have been some of the active plays in the markets. But that's pretty much it. We're going to wind it up right here. Sub 19,500 is where we close in for Friday.
Indians are going miles with a big smile. Boost your growth story.